Hey friends, welcome back to another thrilling episode where we are diving into the nitty-gritty of how Quant Mutual Fund is using some serious number crunching magic to make investment decisions that could potentially change the game. And this is Sundar and you are watching Mindful Finance. As of March 2023, the assets under management of mutual funds in India was rupees 36.7 trillion, approximately $470 billion. The number of mutual fund schemes in India was 4,900 as of March 2023. The average annual return of equity mutual funds in India over the past 10 years was 14%. The average annual return of debt mutual fund in India over the past 10 years was 7%. The top 10 mutual fund houses in India in terms of AEM as of March 2023 were SBI, Reliance, HDFC, ICICI, Nippon, Aditya Birla, Kotak Mahindra, Mirae Asset, UTI Mutual Fund, and TSP Mutual Fund. So mutual funds are a popular investment option in India for a number of reasons. They offer investors the opportunity to diversify their investments, access professional management, and enjoy tax benefits. Mutual funds are also relatively affordable with the minimum investments starting from rupees 500. The growth of mutual funds in India has been driven by a number of factors, including the rising affluence of the Indian middle class, the growing awareness of mutual funds among investors, the introduction of new and innovative mutual fund products, the favorable tax treatment of mutual funds. The future of mutual funds in India looks very bright. The Indian economy is expected to grow at a healthy pace in the coming years, which will create new investment opportunities for mutual funds. The government is also taking steps to promote the growth of the mutual fund industry, such as by simplifying the regulatory frameworks and providing tax incentives. And also, mutual funds IAA. Everybody would have heard about that. As of March 2023, Quant Mutual Fund is ranked 17th in terms of AEM. Quant Mutual Fund doesn't come under the top 10 mutual funds. This is ranked 17th in terms of AEM among all mutual funds houses in India. The fund has been around for over 27 years, but it has yet to break into the top 10. There are a few reasons why Quant Fund is not a top 10 fund. The first thing is the fund is relatively small. As of March 2023, its AEM is only rupees 100 billion, approximately $1.3 billion. This is much smaller than the AEM of the top 10 mutual fund houses in India, which range from 3.6 trillion, approximately $45 billion, to 10.6 trillion rupees, approximately $130 billion. The second thing is the Quant Mutual Fund is a quantitative investment fund, which means that it uses a mathematical and statistical models to identify investment opportunities. This is not a simple concept to explain like other funds, but the concept here is that mainly they follow quantitative method, and this approach can be more complex and expensive than traditional mutual funds. The third point is Quant Mutual Fund has a relatively high expense ratio. As of March 2023, its expense ratio is 2.5%, which is higher than the average expense ratio of 2.0% for all mutual funds in India. This higher expense ratio can eat into investors' return over longer duration. Despite these challenges, Quant Mutual Fund has a strong track record of performance. Over the past 10 years, the fund has generated an average annual return of 50%, which is significantly higher than the average annual return of 12% for all equity mutual funds in India. If Quant Mutual Fund can continue to grow its asset under management and reduce its expense ratio, it is possible that a fund could become a top 10 fund in the future. If you look into the management team of Quant Mutual Fund, Sandeep Tandon, he is the CEO and Chief Investment Officer of Quant Mutual Fund. He has a PhD in economics from Harvard University. Aravind Subramanian, he is a former Chief Economic Advisor to the Government of India. He has a PhD in economics from Stanford University. Kamal Kumar Basu, he is a Director of Quant Mutual Fund. He has over 30 years of experience in the financial. He was previously a CEO of a leading investment bank in India. Rickson Rodriguez, he is a Director of Quant Mutual Fund. He is a serial entrepreneur with over 20 years of experience in the technology industry. He was previously the CEO of a leading e-commerce company in India. And Deepak Sukla is a director of Quant Mutual Fund. He is chartered accountant for over 10 years of experience in the financial services industry. He was previously the CFO of a leading mutual fund company in India. So this is a powerful team who handles the Quant Mutual Fund for the past 2.5 decades. Quant Mutual Fund offers a variety of mutual funds, including equity funds, debt funds, and hybrid funds. The funds offered by Quant Mutual Funds are managed using a quantitative investment approach. This means that fund managers use mathematical and statistical model to identify investment opportunities. Quant Mutual Fund believes that this approach can help to generate alpha. Alpha is nothing but percentage which is more than the benchmark. If index return is 12% and if Quant Mutual Funds gives you 15%, then the alpha is 3. Quant Mutual Fund has generated a very high alpha, which is excess returns over the benchmark. So Quant Mutual Fund has a total AEM, which is assets under management, of over 10,000 crore. It offers a variety of funds, including one is a Quant Active Fund, the other one is Quant Small Cap Fund, Quant Tax Plan, Quant Infrastructure Fund, Quant ESG Equity Fund. So these are the types of funds Quant Funds handles. Each has its own method and goal, but in a high level, whatever the fund you pick, every fund they handle in a quantitative method. They pick stocks in a quantitative method. We'll discuss more about this quantitative method in next few minutes. Quant Mutual Fund has a good track record of performance. This fund has consistently outperformed the market benchmark over the long term. For example, the Quant Active Fund has generated annualized return of over 20% over the past 10 years. See, there are some more details which we want to discuss about the Quant Mutual Funds. The main thing is the quantitative investment approach. They have three approaches. The first one is a quantitative research, where the Quant Mutual Funds investment team uses a variety of quantitative research tools to analyze market data and identify the right time to invest in certain assets. The first one is quantitative research. The Quant Mutual Funds investment team uses a variety of quantitative research tools to analyze market data and identify the investment opportunities. The methods include using statistical analysis, machine learning, and artificial intelligence. So mainly these are to identify the right assets at the right time. Sometimes using a naked eye, we won't be able to see the performance of the assets. But using this method, they can identify the right assets at the right time. The second one is multi-dimensional analysis. Quant Mutual Fund believes that as a wise investor, Quant Mutual Fund also doesn't believe in one single approach. They use multi-dimensional approach to their research. This means that they look at variety of factors such as valuation, liquidity, risk appetite, and time to make investment decisions. The third one is active management. The Quant Mutual Fund is an active investment manager. We know the two types of mutual funds. One is active fund and the passive fund. So passive fund is similar to index funds. They just replicate the index movement. When we say the active fund, some fund manages the portfolio. Obviously, the entire set of quant funds are handled by portfolio managers. Everything is actively managed. What they normally does is when they use this quantitative research to identify the undervalued assets and they will overbuy in portfolios. This active management approach has helped them to consistently outperform the market over the long term. Here are some of the key benefits of using quantitative investment approach. The first one is increased diversifications. By using quantitative research, Quant Mutual Fund is able to identify investment opportunities across a wide range of asset classes and sectors. This helps to reduce risk and improve diversifications. The second one is improved risk-adjusted returns, which means Quant Mutual Fund's active management approach has helped them to consistently outperform the market over the long term. So mainly because they are able to identify undervalued stocks and they try to overbuy it. Let's understand what is this quantitative research method is all about. When you talk about quantitative research methods, so there are we can conduct the research in different ways. The quantitative methods are often used in the natural and social sciences, but they can also be used in a business and other fields. They are particularly useful for research questions that can be answered with numerical data. The name itself is quantitative data, which means whatever you do a research, everything has to be converted into data points and numbers, countable elements, countable numbers. This method, that's why this is called as quantitative method. There are many different quantitative methods that can be used. It all depends on the research questions being asked. Some common quantitative methods include surveys, so which are a popular way to collect quantitative data. They can be used to collect data on a wide range of topics, from people's attitudes and beliefs to the demographic information. Mainly, like survey is something like people come to their home and they take in how many people are in the family, what are the things you use, what are the things you purchase, what is the soap you use, what is rice you use, how often you buy vegetables. Those kind of researchers are done, right? So that is mainly called survey. The second is experiments. The experiments are more, it is done in a control environment. They involve like manipulating one variable and then measuring the effect of that manipulation on another variable. For example, if a family is given only say 5,000 rupees for their grocery purchase, and the other side a family is given 10,000 rupees for their groceries. Now do the test, analyze the data. A family which was given with a 5,000 rupees, how they handle. A family with a 10,000, how they handle or what they purchase. This pattern, this experiment gives some kind of idea of the mindset of our population. The next one is the secondary data analysis. The secondary data analysis is the use of data that has already been collected by someone. The survey and other things, experiment, which are primary research. The one which we are talking about, this is the secondary research, which is somebody would have written a white paper, or somebody would have written a thesis, somebody would have written a point of views. So analyzing all these records, all these researchers coming to a conclusion is the secondary data analysis. So this data can be available from government research or government publications. Some PhD scholars would have done something, market researchers would have done something. Analyzing their data and coming to a conclusion is secondary data analysis. So once quantitative data has been collected, whatever the research was done, that has to be analyzed. So this involves using some statistical methods like finding a mean, median, mode. We would have studied in mathematics or statistics, right? So those kind of methods will be applicable. So it's not our cup of tea. There are experts who are mathematic genius, so they does that. We just leave to the experts. Once the quantitative data has been collected, so it needs to be analyzed. This involves using a statistical method to summarize the data and to test the hypothesis. What is hypothesis? So that is very important thing here. So here is a simple example of how quantitative methods can be used. Let's say you are interested in the relationship between income and happiness. So the research, you can conduct a survey that how much salary if you earn, you will be happy. Do some research. Using the research, sit back and analyze the data. How many of them said that money makes them happy, or the salary which I am earning is enough for me? If I give an example of the grocery purchase, with 5,000, I would have solved my problem. With 10, even if I am getting a 10,000, it might not be enough for. So analyze this data. This analysis normally is done using the statistical method. When you do this analysis, you'll test a hypothesis, that is positive relationship between income and happiness. You may be having a hypothesis saying that more money, more happiness. So you can try to, using this test, you can prove that whether my hypothesis works or not. For example, the 5,000 rupee person is happier than the 10,000 rupee person. That means my hypothesis fails. That means this particular asset is not right type of instrument to invest at this point of time. This quantitative method is a powerful tool that can be used to answer a wide range of research questions. So it is important to note that quantitative methods are not without their limitations. For example, they can be expensive, they could be time consuming, sometimes it could be a demographic specific, a region specific, that could be something like a climate specific, right? So there are n number of reasons are there to n number of results that could give a wrong result for it, right? So additionally, so they can only be used to answer research questions that can be answered with. So this is the one key point, is this limitations. And another thing is this can only be used to answer research questions that can be answered with numerical data. For example, if I say the example of money and the happiness. The happiness is something that's a very subjective, it's an emotional. I cannot quantify it. But when you do a survey for 100 people, and in the 100 people, 60 people said they're happy. This happiness will be converted into data point number. So this converting the number is very essential. If you are not able to convert your data research into a number, then this particular research will not help you in finding a right asset class. So that way, if you are not able to convert into a quantifiable data, then your research will not be a useful one.
Let's look into how Quant Mutual Fund decides where to invest your money using some fancy math. Yep, it's all about those numbers that help make smart investment choices. So let's get started and break it down step by step. First off, let's talk about banks. You know those places where you stash your cash and get loans? When banks struggle with things like bad loans and not making enough money, it's like a red flag waiting at us. So for example, SBI Bank, like a public sector, they just write off the loans. Whenever this kind of things happens, and just guess what? Quant Mutual Fund is like a money detective. They look at these signs and might change how they invest based on what's happening in the banking world. Take some pharmaceutical fund. Imagine you are making medicine. If lots of people around the world want your medicine, you are in the money game. So Quant Mutual Fund looks at big stuff happening around the globe, like how much countries are growing, and if things are getting more expensive, the medicine market is booming, so they might put more money into your company. So for example, currently, it's happening with the Arabindo and Pharma. They are like fortune tellers, but with numbers. So predicting that the Arabindo and Pharma could make them some bucks. And now let's chat about Tata Communications. You know those smartphones you can't live without? Well, there's a whole business behind them. If the firm level is not doing so hot, Quant Mutual Fund might think twice about investing in Tata Communications. Even Tata is a very good company, they don't do that. They are like expert detectives checking if Tata Communication is doing well in this phone game. So think about Reliance Industries and HDFC Bank. They are like the cool kids on the block. When India is doing great and people are excited about money stuff, Quant Mutual Fund might decide to invest more in these companies. It's like a game where they watch if these cool kids are winning. So here's the deal. Quant Mutual Fund is like a super smart friend who looks at all these numbers to help you invest wisely. But remember, even though they use this math magic, there's still some guesswork involved. So investment is not always crystal clear. They also do some assumptions. Before you dive into investing, make sure you do your homework. Even though Quant Mutual Fund might be doing a better job, but just do your homework, know the risk, and match your money goals. Money goals is a puzzle, and Quant Mutual Fund is just one piece. You might be wondering why I picked Quant Mutual Fund today. So mainly I just want to explain to you how the mutual fund managers works, how they allocate the stocks, how they allocate the asset classes, how they create the portfolio, and what is the basics behind that. So each fund managers work on their own methods. I'm a fan of Quant Mutual Funds, and I'd done a thorough research on this particular mutual fund house. That is why I thought of discussing about this mutual fund house. And it's not an investment advice or anything. I'm just trying to share my learnings to you, and it's just for education purpose. And if you want to invest, please do a mindful research on this mutual fund houses. Choose wisely. Mutual fund is not as simple. You just go and invest in any kind of mutual funds. It's not. It doesn't work in that way. Even though it is a mutual fund house, you need to understand which fund suits your needs. Quant Mutual Fund is a risky fund. They take a lot of risk. So if you are a no risk taker, it might be giving you more returns. But just understand this mutual funds comes under a risky category. So hope you understood the mutual fund and the fund managers, how they does this, and how the funds are being allocated, and how they decide which one to allocate, which one to add into the portfolio, which one to remove from the portfolio. Now you should have got some idea about this. So please, request is, if you are not subscribed to my channel, please do subscribe and press the bell icons. Please share this video to your friends and colleagues and support me. Thank you.